Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, April 25th, 2017. Time for an update on the cannabis stocks. I had a request from Stock 51 in the trading room. I know he actively trades the cannabis stocks, and these, as I mentioned, are good for either swing traders or investors. A lot of these stocks trade very well to the technicals. What that means is, I'm just starting with the way my watch list was sorted today, no particular order. You can see CCAN has a series of these downtrend lines, and this one actually has some pretty choppy candlesticks. That's because it was more thinly traded before. And this is the trend. You see, if you look down at the bottom, you can just make it out. I have the volume bars muted, but a lot of these stocks have just seen increasing volume coming in, so you see more normalized candlesticks, meaning the trading isn't as thin as back then, and that's a good thing. It means spreads are smaller, so especially if you're swing trading, that makes a big difference when you have small, especially penny stocks with large spreads. If you're in there only for a few days, the spreads can eat up a lot of your returns. So this is a good thing overall. And as I've mentioned, this is an industry with tremendous potential. It's still an industry in its infancy as far as legalized cannabis, but it's one that is only moving in one direction clearly, and it has been for years, and that's forward, meaning state after state, country after country is legalizing marijuana either for medicinal and or recreational purposes, and that trend again is only going one way, not the other way. And it's only going to continue to go one way, in my opinion. There's a lot of stocks. I'm going to go through these a lot quicker today. The problem I mentioned to Stock 51 is, a couple years ago or so, I started building a watch list of cannabis stocks, and then over time, you guys in the trading room, members of the site, have mentioned names to me, and I add that to my list. So now I have a list of 40 stocks. A couple of those are overlaps because some of these I have listed on the Canadian Venture Exchange or some of the Canadian exchanges, as well as the over-the-counter markets in the U.S. But still, you're talking close to maybe 3 dozen or so stocks. Takes a while. I'm going to go through this quickly today, and if I don't see anything that stands out, I'll just move on past through that stock. All right, so let's go. CCAN. Last video I did, I don't know, maybe a month ago or so. I do these semi-frequently. I mentioned this one on a breakout of the downtrend line, and it's done so. Broke out. If you zoom in, you see a little breakout back test, and even from the point of the breakout, that thing has already run up to the highs about 80%. Here it's coming up on the first target now, resistance. I zeroed that in. That's $1.04, and it did come close to that the other day. As I always mention, I like to sell. If that's my target, I sell before there. If I'm holding out for $1.40, I'm going to sell a little bit before there, maybe about $1.37 or so, to try to avoid missing a fill in case the stock reverses. But again, you have to define your time frame. If you're a swing trader and going for the quick buck, this is where you probably want to take profits right now. That's pretty substantial resistance. We may have a reaction there, but these guys, if the momentum's there, they can just blow right through resistance. So there's your next target, and ultimately this one probably works its way up to $3. EDXC. Okay, I like this one right now. Mixed signals. Last time I covered it, I warned about this trend line. We had a recent divergent high, but I mentioned that divergent high already did play out for a decent correction. We've been tapping below that trend line, although we really held this support level here. You can see that's at 0.0484. A lot of reactions there. That's the same trend line. I haven't modified any of these charts since the last video. So these are all the same levels covered before. If I'm not mistaken, I don't believe I've added any lines to any of these charts, but again, you can just reference the last video. This is what we need to take out. This trend line here is at roughly, call it 6 cents. Yeah, about the 6-cent share level. And if it pops above there, that would be bullish. If it breaks that point, 40484 support, then you have a buy zone down here and around any of these levels here. I would say come in somewhere here between these two levels. And again, I'm trying to save time here on these videos, so I can't put all the levels up. Just replicate those, or if you have a favorite, replicate these on your own charts. I always use a log scale, very important, especially with these stocks, because there's big price moves. If you see what happens to the trend lines when I put on a arithmetic scaling, completely different technical story. Because of the large price swings, it is imperative, and I cannot say that strongly enough, imperative to use log scaling, not linear or arithmetic, which mean the same thing. Okay, so that's that. Those are the levels to watch. Bullish on a breakout is in each and every line. If I don't make mention, each and every line on my charts are resistance if overhead, support if those lines are below. So you want to watch for the trend lines. Ideally you buy on a pullback to a trend line, except if that pullback comes when you have divergence, like on a divergent high here. That's that divergence had to be worked off, the overbought conditions, and that may have happened here already. So just again, this is sort of sandwiching here, and this little range here, and so the next breakout of that may determine where this guy is going, and if it pulls back, that's where you want to buy. All right, moving along, CGRW, downtrend line breakout, first target / resistance, and this would be my preferred swing target if it takes out this downtrend line, and that's at, I need to pop up over here, around 229 level, so maybe sell a little bit below that. If it takes that out, then it's going to it'll want to challenge its previous high around 346. Next one up, Signal Bay, SGBY. This had this descending triangle pattern, almost a wedge, slightly downsloping, more like a descending triangle pattern. It broke out, and it's really pinched between a rock and a hard place, meaning support and resistance. You can see that right here. These are the same levels that I had before, and you can see this one just trading there. It broke out, it back tested, and so all it needs to do is punch up through this level, that call it 2.5 cents a share level, and then it runs up to the 0.31, somewhere around there. Doesn't sound like much, but again, when you're dealing with these penny stocks, that you're good for a move there. If it does run up that far, that's about 30%. So worth it in my book, even if you have a very small position, which you need to do in trading these things. If you haven't listened to my old previous videos, please do. I usually spend half the video, or not half of it, but a good part of it, harping on the fact that these are extremely aggressive speculative stocks. I take a shotgun approach, meaning I sprinkle my cash among my top picks at the time, for diversification, and also put in very small amounts, because if you're looking at stocks where you can easily catch a right trend, make 300, 400, 500%, therefore you need to use stops that are measured well into the double digits if you're trading those, or you're just going to get shaken out due to the day-to-day swings in these guys. So there's a THCBF downtrend line, pretty well defined. If it pops, there's your first target. Just from where the stock is now, we don't really have an objective buy at this point, but it's one that you could scale into. That's 56% above current levels. Now, the fact that it's below this support level, that's a little bit of a caution sign. So ideally, what you want to do on this one, wait for it to regain this former support, now resistance level at about 55 cents. And as well as that downtrend line. And I really like it if it does that, because that's intersecting resistance. You'll have them both come in around the same time. And some of my favorite trades are when intersecting resistance levels are taken out, and that would give you that quick pop up, probably about a 50% or so gain, and then maybe work its way up just above $1 there. So some potential, but some work to be done. EMC.V, relatively new name, virtually no trading. It was so thin here. So you really got to look at the chart this way. There's a support level, which it's above now. Just not a lot there. Let's just move on. MCIG, downtrend line, breakout. It's sort of just flagging along. That's a lot of these are doing this now. You can see that there's not a tremendous amount of momentum in the sector, although if you're being selective right now, there are some names moving to the upside and even some moving to the downside. But overall, this one looks good. It had that breakout. It just needs to hold this level. So let's say you own it or you want to buy it here. here's your stop, a little bit below that level. These aren't exact, these lines. I just put a line up and you can zero these in. So you could have a stop below that level. That is support. In other words, that line there. And as you can see, your next target zone is right up here. There's a lot of reactions. This is what I call a target or resistance zone. You can see numerous reactions there where it acted as support. Once that support was broken, we came back and we back tested at the top of the zone from below, which is resistance. So that is now resistance and your next target right here. Target zone, we'll just use that little X and your next target up there. Okay, next one up, AMMJ. It was dancing along this level here, about 66 cents for a while. That was support, and it has crept below that level. It's not really moving down impulsive. If it does, there's your next support, 52 cents. We had a few spikes down there. So what would I want to see on this one? Well, right now I wouldn't take it because it just limped below support. But if it regains that 66 level or 0.6615 or so, that would be bullish because it would have regained support. And so ideally, again, if whether you're swing trading these, whether you're scaling it as an investor, you want to buy pullbacks to support. I have very little to no interest to short these guys. Normally I might say on a stock, well, there's two things as a trader you do when a stock comes to support. You either look to position long if you think that support level will hold and you're bullish, or you look to short it on a break of support. Here, more so you're just concerned about stopping out. You buy support, you buy these pullbacks to support, and you can sell all the rips. Usually when it falls to this support level, it has these big rips. That's one thing to do. But right now, again, it's under support, so safer to just let it get back above there, and then you could swing it up to the top of this range. I could probably put another line there at that previous reaction high, and then view it this way. This is one big, large sideways trading range. Remember, I've said this many times, these stocks had tremendous run-ups. Nothing goes straight up forever. Yes, there's tremendous growth potential in the sector, but a stock can only go up so much so fast to reflect all future, profit potential. This one went up 2,155% there in just a few months, okay? So 2,155%. It needs to consolidate. It needs to work off those overbought conditions. And at some point, the uptrend may resume. If it doesn't, if it moves lower, here's a pretty solid buy point here down around 33 cents. There's a reaction high there. We had a couple reactions in between there. And that may be the case, guys. So, right now, well, there's a criteria. Either wait till it regains that level, or try to buy it here with a stop below, or just continue to scale in if you're a long-term investor. And really, I don't want to see this one go below 33, or at least for any extended period of time. I often talk about this too. Just keep in mind that I call them momentum-fueled overshoots because of the powerful moves in these things. If the sector or this particular stock were to have a waterfall sell-off, it would not be uncommon or unusual to see it overshoot that 33-cent level for a day or two, maybe even a few days, and then come back above it. Especially if it's heading down there with a lot of velocity or momentum. That's what I call a momentum-fueled overshoot. So just something to keep in mind, particularly with your stops or if you're scaling in or trying to buy at these support levels. You just have to give these guys room, that's all. And again, where you allow for some wider than usual stops, 20, 30, 40% maybe, you're looking at gains that can be well into the triple and even quadruple digits on these guys. Powerful stuff with these stocks because of the the low price nature and the high growth industry. Not a lot of history on GRWG, so I'm not going to spend a lot of time. I'm not crazy about this downtrend line. It's again, there's just not even a full year's price history, and I like to see at least a year of trading to get a good read on a chart. There's CANN, General Cannabis. This one I've mentioned many times over is that $2 level. This is really our buy zone here. It's a nice support level. I have a minor support level line below that where you can see these overshoots. Look at the candlestick wicks or tails down there, the shadows on the candles. So sometimes those are those intraday spikes, but it tends to hold that $2 level. So on this one, you accumulate at $2. If that level goes with conviction, you start seeing, big move through, a couple daily closes, especially down here, down around the 175, 180 level or lower. Then that $2 level is lost, and then you might want to throw your hand, muck your hand. That's just an expression in poker. Either way, going back over time, again, you can see the reactions all around that level. So I put this as a pretty significant level, and it needs to hold. And if it doesn't, that's not good. And if it does, whoops, wrong tool. This one over time can go to any or all of these overhead levels. You can see there's reactions at each of these. So these are all potential targets. OGI.V. .V means trades on the Canadian Venture Exchange. This one might also have a U.S. Shares that trade on the U.S., either pink sheets, bulletin board, over-the-counter stocks. Organigram Holdings. What do we see here? Well, we can see an uptrend line, which was broken. That was a warning sign. It back tested and went lower. And then there was a downtrend line, and we broke above the downtrend line. See how well they trade to the technicals? Well-defined downtrend line. It ripped right up to that target, that resistance. I had at 353. That was defined by these previous reaction highs. So again, just try to quantify it from where that broke out. That was about a 44% run. Now it's in no man's land. No man's land is what I refer to as stock being just smack in the middle between support and resistance. So, ideally you want to buy it down to a dip to this level, sell on a rip up to that level, or wait for a breakout of that level and then try to take it up to the previous highs around 450 or so. And over time that one may continue, above that. CVSI, I like this one. It trades well to these downtrend lines. You can go back even farther in time. This is 4 years. You see downtrend lines and a series of breakouts. This was a little false breakout here, but then it broke out. And again, don't underestimate that move. That was a big move back there, probably 50% or so. Another downtrend line, well-defined breakout with a huge rally on that stock, 250% or so. Bull flag action in the middle. So again, this one trades well to the technicals. Now, what am I watching? I'm watching this downtrend line. We have numerous reactions. Started back here, reactions there, and it's also come down to support. So you have a 2 levels to watch. You can see how well defined. If you take that purple line, it's at 34 cents. Look at all the reactions. When the stock is below, it acts as resistance, and when the stock is above, it acts as support. So you have a stock now pinched between, you could even take this one here at 34 with a stop below that level. If it breaks 34, especially on a daily close or big move down, it probably heads down to this support zone. You can see here all these reactions right here where it found support. And that's a pretty big drop, so you have to be prepared for that, and that's a possibility. However, if it breaks, there's a lot of upside potential. I think at minimum it heads up here at about the 54-cent level. And again, over time, if you're an investor, you want to tuck away your own little, until they come out with a very liquid, actively traded ETF. I've essentially made my own mutual fund with just taking a shotgun approach to these stocks, and then also micromanaging or trading these strategically. In other words, when you have these huge rips, if you get divergent highs, you hit price targets, then you either reduce by closing your entire position or some of it, and you look to buy pullbacks to support, like right here, that's 34-cent level. ACBFF, still one of my favorites. Started buying this one back here at 55 cents, and it's now at $2.04. And like everything else, the story is similar. Huge run up, and the stock has just been working its way sideways. In fact, more so, I highlighted this recently. This was the sideways trading range. We had a breakout here, and I pointed that out recently. Proved to be a false breakout to the top of the range, but the stock is still trading just inside the top of the range. So maybe the next one sticks, maybe not. Downside break of the range, that would be bearish. That could bring the stock all the way back, potentially down here to the $1 level. That's a big void to fill. There's a gap right here and a reaction there. So you can see the first support zone, but may come back into $1, but I don't see that now. I like the story on this one fundamentally, and that one I still have a core position that I've held since, all the way back here at 55. CBDS And I'll do a few more and we'll wrap up, and then I'll maybe follow up with a second part of the video. This one I mentioned, here's a downtrend line. Must have talked on that last time. There were two, I'm sorry, uptrend line. There were two uptrend lines. This one broke and back tested, and this was support. So the stock, this one's not looking so hot right now, guys. This was a support level. That support level was holding. It was dancing on support, but it broke this uptrend line here. You can see I have an alternative uptrend line. Then it went on to break the horizontal support level and seems to be maybe bear flagging. So that's not a great technical posture. You don't want to step in and buy this one now. It may want to come all the way back down here. This is great support if it gets there. That's around between $3.50 and $4, that support zone. You can see all the reactions. So if you want to know where I think to step in and buy this one or recycle back in, it would be down here if it gets here. Now, if it doesn't get there, I always talk about have a plan A and a plan B if you want to buy a stock. Plan A, ideally, hey, if you can get on sale, great. If not, then you want to see this level regain. That would be bullish. Since it broke support, fewer things in trading are more bullish than a false break of support. Ushers in short sellers, shakes out weak-handed longs. So if the stock can get back above that support level, great. And then your next target would be back up here to the previous highs. And ultimately, if it can break out of there, blue skies for that stock. All right, I'm going to four more we'll do, and then we'll stop. CBIS, downtrend line, breakout. Had a little bit of a pop, and the breakout sort of fizzled out so far. It's basically, if you look at it, just trading, slogging around in this range here now for a while. Had that brief spike below, but an equally sharp spike back within. And there is support. This is, if you just kind of look to the left of the chart here, you can see all these reactions down from below. So this is really a battleground for this stock. Now, like a lot of these, remember, this was a common theme. We had a tremendous run-up. Well, I'll just shade it like that and then move that away. A tremendous run-up, but that led to a divergent high. And I often say divergences, more often than not, not always, but more often than not, they play out for a trend reversal. We got that. We had a pretty healthy correction. Just based on the scope of this pattern, you look at the widest part of the wedge, I think that was, well, you would actually add the breakout to the end of the wedge. Maybe this one needs to come all the way down here, possibly. Maybe, maybe not. But right now, that's a battleground, so I'll probably talk too much on this one because I don't have a very strong opinion on it. So let's move on to MJN.V. Pharmacan Capital Corp, Canadian Venture Exchange. Here's an ascending price channel. Here's a trend line that's starting to be breached. We haven't seen any impulsive selling, but we have support just below. And remember, the uptrend is pretty powerful in these things, so sometimes these stocks stop at early shallow supports. In other words, when they break down, they move down less than the measured target of the pattern. We did have a divergent high. That's worth noting. See at this point, the negative divergences down here. And actually we made a marginal higher high, and that's pretty steep divergence. So yeah, here's one I'd be a little cautious on because we did put in another divergent high right there. And yeah, I would stay away from this one for the time being and prefer to buy it at, well, this is a first support. I like this support better. I like a lot of reactions there, and I love this support level. So something along these lines, if you want to own it. Maybe a quarter position right here. If it drops there, take it to a half position. And a full position if it gets there. And a full position is all relative to how much you want to have it both in the sector and then within the stock. Let's just say, I'll give you an example. Let's say you have a long-term account for what IRA, whatever it is, and you want to allocate 10% of that portfolio to these speculative, high growth, high risk trades. So 10% of, let's say it's 100 grand, you get $10,000. So then you have to determine, okay, of that 10,000, I want to have exposure to the cannabis sector. How much do I want to have in this one stock? And that might only come out to, $500 or so. Depends how many positions you want to hold. And so quarter position, another quarter, then add to a full position there, adding the last half. and that would be plan A. Now, plan B would be, let's say you added a quarter there, and all of a sudden the sector starts taking off. You see a lot of these names moving. You see this stock turn around, move up here, and then break out, take out those previous highs impulsively. Then you can go ahead and scale back in, add another quarter position there, see if the breakout holds. Maybe we come and back test those highs, and you take it to a full position with a stop below, and it takes off. So that's plan A, plan B. But that would be my preferred scenario to scale down in here. I think this one has a little bit of hot air to let out. And next one up is Weed, TO again, Toronto. This is the Toronto Exchange, TSX, little triangle type pattern. I really haven't put a lot on this chart here. We need to take out these previous highs. There was just a spike above that level, and just not a very clear chart. I don't see any very solid levels to step in and buy. There's a couple reactions here. So maybe if we get a downside break of this triangle, that would be your buy point down here. And yeah, that's all I can see for now. And of course, it'd be bullish if we took that out. Now, of course, the first thing is which way is this triangle going to break? And from there, again, that's your next buy signal. Break over there. A break under there would not be good for that stock. But that also be an objective level to buy and add exposure. All right, OGRMF, and we are now at number 19. So we're almost halfway through my watch list. I'll stop at 20. And you had a nice, very well-defined uptrend line, numerous reactions. When that uptrend line broke, that was a red flag, and the stock did drop quite a bit. So, 1 second here. Okay, dropped, had a correction. The correction played out. Again, not a huge correction relative to the move up, but it popped up, hit this 271 resistance level. You can see how well that was defined by these previous reaction highs. It's sort of slogging around right now. I'll tell you what, this one's somewhat in no man's land. There's an uptrend line to watch, and if that uptrend line breaks, this is your pretty key support level down here around these previous reaction lows. There's also pretty decent support here as I study this chart as I'm talking to you. I'm looking at all these reactions here, these reactions here. So let me give you that level just in case you want to step in and buy there. $1.75 roughly. And if the sector gets really ugly, let's just say something happens over the next few months, a lot of these stocks move lower. In this one in particular, this is a really nice level, about the 103 level. I see a lot of reactions here, reaction there. Then once we broke that level, we back tested it from above. That's now support reaction. So if you want to know a nice buy point, and it's a pretty steep drop if it gets there, but down around the $1.03 level would be a nice point to take a full position in this stock if it gets there. Until then, I think it warrants caution like a lot of these. And finally, PHOT, Grow Life. Not a lot of trading history. Well, trading, but it was very thin. There's a downtrend line, but I mean, you can see these are intraday chops. These thin lines are candlestick wicks, shadows they're called. Tails down below, wicks above, and that means intraday move. So we close back above it. So it is respecting this trend line. I mean, it's just what happens with a thinly traded stock. Somebody puts a sell order in, and it might fill down here. And then the stock snaps back up and trades here. So you really have to pay attention to the closes. Probably you can put a line chart up and see that a little better than these candlestick charts. But that's the story on this one. It had a downtrend line here, finally broke out, and it's been back testing that downtrend line. So it's at dual support levels right now. It's at horizontal support, which is defined by this line here, as well as a downtrend line. But it's a low price little sucker. I mean, be careful, trading these. It's only under 1 cent a share. But if it goes up, the next target or resistance is at 2 cents a share. So you do the simple math. That's 100% on your money if you get it. So if you can take it, maybe give yourself a 30% stop. That's still better than a 3-to-1 RR. And you step in here and buy its dual support. But the tough part is these intraday little spikes. if you set a sell limit order, and it's a good to cancel standing, I'm sorry, a stop loss order is what I meant to say. Stop limit. You have to use, it's, with these penny stocks, you have to use stop limit orders. Most brokers won't take a stop loss because that converts to a market order, and you don't want to trade, a 0.009 cent stock with a market order. Trust me on that. So what happens is what I'm getting at. If you put a stop limit order, stop loss, stop limit order at 30% below, there's a good chance that can get run intraday. So you almost have to just either have the time to sit in front of the screen and watch these, or just check it at the end of the day. And again, the key is you don't put enough money into these that if the whole thing gets wiped out, it's not going to hurt you. That example I just used a minute ago, if you have 100 grand in a long-term account and you want to put 10,000 in the cannabis stocks, this one you might put 300 bucks. You might say, well, it's 300 bucks. Is that even worth a trade? Sure. If it just hits that first minimum target, you doubled your money, you made 300 bucks. And if in 3-4 years from now, this thing's worth $1, $2 a share, it's going to be up thousands of percent. So it's worth it. So now on the flip side, so you have then you allow for a third of that money to be lost. That's 33 bucks on the downside, or whatever number I just used. $100 if you put in $300. I'm sorry. It's all relative, but just keep your position sizes small. All right, I've got to wrap it up here. We covered 20 of the 40 stocks. I did spend a lot of time going over some of the basic strategies, things to look out for, how to trade these stocks. I won't have to do that in the next video, so it should go a little faster. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.